After so many years in the market, I can confidently say that this strategy will be the only strategy that I will ever use in the markets, because it gets repeated every single day in the markets. It's so simple that like a complete beginner could use it. So make sure to stick till the end so you understand it completely. So let's actually get into it. So before I actually get into the strategy and what we will be trading, you can see my profits using this exact model. So you can see weeks right here. This is some random month from the last year. So you can see the exact profits, you can see the win rate with this strategy. So I'm not like showing you something that I don't even trade. I'm actually doing it live every single day. Also, after the video, you can check out all of these trades right here that you see on the screen, losses, wins. You can check them out on the other channel where I film all the trade recaps, all the live tradings, everything. So make sure to do that after the video. So before I actually get into explaining, I want to show you two pictures. So this is the first picture right here. This is what we are going to trade. And then this is the second picture. So it looks even more complicated, but trust me, in 10 or 15 minutes, you're going to clearly know what all of this means and why is it so simple. But it looks so complicated right now because we will actually split everything into such a small steps that it's so easy. So let's actually get into the goals. So the goals of this video are going to be to learn to apply this strategy, so my strategy, to learn to use it every single day because it's so dumb, so simple, and it just works. It's proven, so it cannot be better in any sort of way. And the third goal is to reach level of profitability and consistency. So you are going to make profits not every single day, but every single month, that is for sure. So that is the goal of this video. Okay, so let's actually get into the learning of the strategy. So the first thing that we are going to have is a letter S, as you can see right here. So S stands for the structure. So trust me, it's going to be very simple, only 3 letters, and the first one is structure. So what structure is, you can really understand it without even an explanation, because the structure is just us actually going somewhere. So us making an actual move to some side. So let's say, for example, here, right here, we can actually see that we are actually making structure to the upside. So we made 3 blue candles, and you can see that we call this step a structure because market is actually going from here all the way to here. So it's actually making some kind of direction and making an actual push in the market that we just call structure. So that is the first step. We are just going to spot where the market is actually headed. The second thing is going to be C, and that stands for correction. So after structure, after market actually pushes to one direction, what the market is always, but I mean always, going to want and need to do is some kind of correction. So after we get a large push to one side, we want to correct to another side, but not as big as this move right here. We are going to get them much smaller, exactly like this. They are not going to be like this. It's always going to be like this. After a structure, we are going to get some kind of correction to the downside, and then you can already guess what is next, and that is just another structure. So after we actually get a structure, which is just a push to the upside like this one, we are going to get a simple correction. So market is going to want to correct because market always needs to have somebody on the other side, which means if there is going to be buyers, there needs to be sellers. Otherwise, buyers are not going to be able to buy from anybody. So what they do is they make these kind of corrections where it just confuses people and makes people think that market is actually going to go to the downside, but then we just continue to the upside. And that happens when market actually corrects enough, so there is enough sellers and buyers in the market, not just oversaturated buyers or oversaturated sellers. So now that we know that we just have a structure in the market like this one, and then a correction, and then another structure where we just know that market is trending to the upside, so making pushes to the upside and slow retracements to the downside, what is actually going to be the third letter that is going to be the key to this whole strategy? And that one is going to be M, that stands for manipulation. So here it is, and what the manipulation is going to be, you already probably like understand it because we manipulated the price, but there is such a logical explanation behind this step, and that is that market actually manipulated, stopped out a lot of buyers, a lot of sellers out of the market, and just took the money, extracted the money. And what makes this step actually happen is the huge institutions, the banks, everybody. So what is the point behind actual manipulation? So if the market was always moving like this with just, trendings to the upside or to the downsides, everybody would just buy on corrections, sell once they are happy with the profits. But since the market actually needs to kind of, I wouldn't really say steal the money from retail traders, but it's kind of similar to that, because they're actually going to take their money, because they are going to lose trades, and the banks, the institutions, are going to sweep them, manipulate them. And what is the logic behind it? So now you have to focus really hard on this one. So look at this. We have some kind of basic structure to the upside. Everybody is thinking we are in some kind of a uptrend, because we are going to make small retracement into some kind of zone. Let's say, for example, here we retraced into a fair value gap, as you can see, and then we just bounce back to the upside. So everybody is just, I mean, not everybody, but 97% of people, 99, are just going to wait for the retest of this fair value gap, and then they are going to buy into the market from that. And what that makes us do is that makes us know that here on this low there's going to be a bunch of stop losses. So why is that? Because when they actually see a reaction from this kind of fair value gap, what are they going to do? They're going to buy either on a retest or on a reaction right here. And where is the stop loss going to go? On the low of this move. So on the low of the correction, so right here, the thing that we marked, we are going to look at a corrections low, and that is going to be our biggest liquidity point. So we are going to wait. So if we enter the market right here, right now, we cannot really be sure that market is actually going to go to the upside, because why would a market just do a manipulation leg right now and then continue going to the upside? And that is exactly what we are going to wait for. So after we get a structure, correction, and then another structure, we are just going to wait till we get some kind of sweep to the downside, so we actually manipulate buyers out of the market. And then also the other side, what the sellers are going to think is that we made some kind of break of structure. So what they are going to do is they are going to start selling the market, but then what happens is we just continue our normal direction, and we actually manipulate both buyers and both sellers, because they are going to think that market is actually starting to reverse, and these ones are going to get stopped out. So everybody is going to just kind of lose money, but us, the smart money traders, who are just going to wait for these kind of manipulations and liquidity sweeps to happen in the market, we are actually going to be on the right side. And then when the manipulation phase actually happens in the market, we are going to wait for a fair value gap on the lower time frame. So I'm going to explain that in details in the next few slides. Then we are going to wait for a fair value gap to get inversed, and then after that, what is going to happen? Just another structure to the upside. So it's really simple. We just do a structure, correction, structure. After that, we want to see a manipulation, and then we just see another structure, correction, structure onto a manipulation, and then just again. So it's kind of circling in the market what we are gonna get, because there is always going to be a market direction. There is going to just lure all the traders into the market, and then after that a manipulation happens, everybody loses money, and then the true move again continues to happen, which is just a structure, correction, structure. So now we just want to make sure that we know what time frames are we going to use. So for the structure, which is just these structures right here, we are actually going to use the 5 or the 15-minute time frame. So it all depends on whether the 5 and the 15 are going to kind of be obvious and clear, and they just, when you could kind of just switch them around. So whichever one is easier to read for you is the one that you are going to use. So it's either 5 or the 15-minute time frame. It doesn't really matter which one it is, because it's still the same market, it's the same structure, so it's not going to be any difference for spotting the structure and also spotting the correction and also marking out the liquidity levels. So after we spot out the structure, the correction, the structure, we also want to point out the low of the correction phase, which is just going to let us know where the liquidity is resting and what we want to actually see swept. And then after that, what we want to do is we want to scale down to the lower time frame, so maybe a 1-minute time frame, where we are going to actually wait for the market to come down, actually sweep this low right here, and then after we get an actual sweep of this low down here of the correction phase, what we are going to do is on the lower time frame, we wait for the last imbalance to actually get disrespected. And what a disrespect is a closure above. So if you want to trade to the upside like this, if you want to get a long position, we want to see a closure, actual body closure above this fair value gap, and then after that we just enter long positions right here, and then we just target the upside liquidity or some kind of external liquidity to the upside, and we are just going to see a beautiful move about 84% of the time, as you saw in the beginning of the video. So right now when you look at his picture once again, I'm pretty sure that the things are really clear for you, but right now I'm actually going to show you a live examples on the actual chart, so you actually know how this is gonna look on the real chart. But before that, we just want to know some kind of key rules. So what we are gonna trade, which timing is, it always needs to be on the market open hours. So my favorite is New York session, that is from 9:30 to 11 a.m. Eastern time, and you can trade London, you can trade Asia, but this is my favorite. And then we are going to only trade one instrument, so it can be crypto, it can be gold, it can be Nasdaq indices, whatever options. But the point is, you don't want to trade 3 different ones. So it's going to work on everything, but the point is you need to pick one that you are going to be focused on, and that's how you are going to get those most consistent results. And also, before we actually go into the live example, if you want to claim a 10-page playbook of this strategy, it's going to be down there in the description, so make sure to do that after the video. And if you learned something new, just make sure to drop a subscribe and leave a like. Also comment any questions you want, I'm going to answer to every single one of them. So let's actually get into the example. Okay, so here we are at an actual live market. So the symbol I'm going to show you today how I'm trading this is on the NQ, which is Nasdaq, and that is just what I'm using the most. And I just find that this model works the best on the Nasdaq. So the thing that we are going to look for is on the 5-minute time frame. We are going to look for the structure, correction, structure, and then manipulation. So let's actually start mapping out the chart. So like this, all of this seems really messy, so we are just going to start with a simple first step. So the first step we are going to do is we are going to mark out our structure. So we are going to put here, we can see we have a beautiful structure right here. We are going to mark it out the same color as we did on the presentation, so this is going to be our structure phase right here. So after structure, we are going to get a correction phase, so this one right here is going to be the correction phase. So I'm going to mark it out like this, and then we are just going to color it the yellow as we did before. So we have structure, then correction, and then after that we have another structure right here. And then what we are going to expect from the market is to get an actual manipulation. But in this example, if we mark the low of the correction right here, we can see that we just had another correction right here. So this was not an actual manipulation because we did not end up sweeping. So if we ended up sweeping the low of this correction right here, that would be a manipulation. But since we didn't do that, this is still correction for us. So this can totally happen. We are just going to get one more kind of circulation of structure and correction. So what we are going to do is we are just going to continue marking out the actual structures, the actual corrections, structures, corrections, structures. And then what we can again expect is the manipulation of the actual low, which is this one right here, and then we can actually mark out this one, which was the actual biggest low of this range. And then what we can do right now is we can wait for the sweeps. And then since we didn't get it the first time, and you can see how the market came so close to it and then went to the previous range that we created right here, which means that we are just very likely going to get the sweep, maybe even of both of these, and then we are going to get the potential setup. So let's actually go to the 1-minute time frame and let's see what the market is going to do. So looks like market is going to go lower. So that's basically our manipulation. So this right now is our manipulation, but I'm not going to mark it because it's going to get messy on the chart. But what are we looking for right now? So what we are looking for is a last fair value gap, so on the 1-minute chart, and this is our fair value gap. So all we need to do is we need to see it get actually closed or disrespected to the upside. So we came very close to disrespecting it. So let's see what is going to happen. And looks like we got the closure right here. So we enter on the closure, we put a stop loss below the fair value gap, and then we target this high up here. So it's not the biggest risk to reward, for example, this trade, but compare it with a 84% win rate, it's just abnormally huge profit. So we don't really care about 10 risk to reward when we can have 84% win rate. So let's see how does it actually play out, and you can see it play out beautifully. And then after that we just kind of go straight back to the entry and probably even lose because we actually swept this liquidity right here. So if we scale back to the 5-minute time frame, what exactly happened is we finally got that last manipulation, which is looking exactly like this. So we mark it out with the red, and then if we want to see, we had another structure right here to the upside, and right now we are in the process of getting another correction. So market is just a cycling between structure, correction, and manipulation. So we are always going to get structure, correction, structure, then manipulation, or we are just going to continue with correction, structure until we actually get the manipulation, and then we are just going to cycle those around, get the potential setups, and then we are just going to scalp our profits like that and make money in the markets. So I really do hope that you enjoyed the video, because I really put a lot of effort into it, and I think this can actually change your life or somebody else's life who is going to actually use this information to their advantage. So if you liked it, if you found this video helpful, make sure to leave a like, subscribe to the channel so I know I'm doing something right on the YouTube. And yeah, also if you want to maybe get mentored by me one-on-one, if there is still spots, you can check out down there in the description. There might be spots not available as you are watching this video right now, but just check it out. Who knows, maybe there is some spots left. And yeah, with all of that being said, I hope you enjoyed the video, and I'm gonna see you in the next one. Peace.